Hey, what's up, everybody? It's Wednesday, November 12th. I'm just going to review some price action and clean up these charts. So let's go. Uh, create some new drawing sets. Just for this. Okay. So I'm going to hide some studies, remove some studies. I'm going to leave them on. Just a second. Okay. So big thing I want to talk. What's up, Mad Max? Big thing I want to talk about is really in regards to the 10 and 2 strategy. I know Maple really likes 10 and 3. I still like 10 and 2. The reason I like 10 and 2, the number one reason I like 10 and 2, I'm going to get into, is basically has to do with the fact that a lot of times at the start of a new 10-minute candle, which will be inside of a 3-minute candle, which sometimes can be inside of a 3-minute candle, right? A lot of times at the 10-minute candle, you will have like an impulsive or fake move. And then like from there, I can see that I get that impulse fake move on 2 different time frames and then be able to take a trade simply based off of that, right? So like, for example, one of my rules that I've been trying to strictly follow is that I don't trade the first 30 minutes of the day. Specifically, I don't trade until 10:02, and the reason for that is if we have news at 10 o'clock, I like to try to let the news settle out. Now, that's not like a hard and fast rule. If I know we have news at 10, or like 9:45 and 10, I am much more strict with that. Or I might take like a super small scalp, like small size small scalp, that typically just fits like, okay, I like the structure and my daily goal on this prop account is relatively low, so let me take a low risk, low reward trade. Sometimes it's as simple as, hey, I just need to flip a day. You know, like whether it's on a TPT eval, you need to flip a day, or like on an Apex account, if you've got over 5 winning days of greater than $50, you know, at that point you have got to pay, and you're well over the threshold, you've got to pay out guaranteed. So why would I continue to trade hard and put more risk on day 6, day 7, day 8? If the first 5 days I've got over $50 in profit, I've got more than enough to take a payout. I've been following the rules. I'm going to be eligible for a payout. The next 3 days I want to flip, and all I'll do is take one micro, you know, typically with a 10-point target, 10-point stop, and just say, I really like this setup. I think it's going to work. And if I get stopped for 10 points, it's $20. I don't care. But if I make $20, it's another $20 that I will just leave as padding on my account. Like for next time, I probably won't request it. So all that being said, with waiting, you know, here's our orb. First 30 minutes of the day, right? So I was not even home and available to trade this yet. However, I do really, really like the structure and the setup that we have approaching the open. So approaching the open, just completely regardless of the prior day's price action. But you know, here you can see we pushed up, right? We made this new high here over 830. I got something I'm looking into with the bill breaker levels and that 8 in like the 30s. But until then, we come back down. We have this VWAP bounce, strong move here at 7 a.m. and we get some rejection over the London Orb high. And then this candle is extremely telling right here at 850. So before we even get this move down, right at the open, which this is an insanely large candle, right? 111 points. On that was 111 points, and what was the whole entire day? The whole entire day was 341. So you got a third of the entire day's move on the first candle, and then another third on the second candle. So 2/3 of the entire day's move were the first 20 minutes. So sometimes it's unfortunate, and you know, and those things happen, and I don't catch those, and I really come to accept. You know, I'm weaving some psychology here with this price action thing. I've really come to accept that like that doesn't matter. It really doesn't matter. There will be other days, other moves, and it's just the luck of the draw with trading. But what I really like about this structure here is you have an obvious lower high, right? It's coming down. You're rejecting, you're basing under the Lorb high, and on the 2-minute, you have really clean break under the EMAs, and then you have very, very clear. I'm trying to really zoom in on this. You know, a very, very clear flag back into the EMAs, right? And you don't have to like draw it, but I'm just trying to illustrate here for a second that price action is more or less drifting into the EMAs who are catching up for the next leg down. We're going to take those off. Look at this here. You have very, very, and let's just put this on a different default color that'll stand out more. So you have very clear basing under this pivot, right? And why is that important? Because we came down, we tested this here, we failed to break a new high after like this zigzag, one leg up, pull back, another leg up, it fails, right? So this initial start of the move, these folks are getting out. You have a candle by candle flip back short. It pops back up into the EMAs, into that area, right? This is, again, this is a 512 cloud, but you're obviously between the 9 and 20, a fantastic place to short. It pushes up, you wait, you see it start to come back down, and again, you've already fulfilled the bill breaker range to the 80s, yes, but you're not even going back over the 90s. You couldn't close back over the 90s. So it's another thing that like, hey, this looks pretty weak. Like overall, if you knew nothing else, this doesn't look good. Right? You can just disregard. You could disregard the 2-minute 200. So doesn't look too good. And it starts to push back down. You get some doji action here. I get it that this probably would shake a lot of people out. I totally understand that. Because is it likely that we could just have this move where we pop up, we clear over this, maybe where some stops are in flush? Yes. That is, of course, always possible. I want to pull up on another. I want to on another screen just kind of keep an eye on where VIX is relative to everything, and then I can talk about it. But and this is a good thing to bring up right now is that if I look, and maybe I'll just do this. I'm gonna just put VIX right here. Level 2. And okay. And so if you look at VIX here, you see that because I love watching the VIX, guys. That is like my ultimate confirmation. VIX had a pretty powerful move holding the pre-market low. So pre-market low holds, pre-market high is holding. You could basically just risk this area here with any sort of short. But it breaks over and it holds and bases on the 20 EMA, flips, and then when the candle finally opens, it's later than 9:30 usually. You know, it's already started to move back down, so you have a little VIX pop, it holds, and then you really get the pop. So moving this back aside. And I really like that. And if you didn't catch that move, that's totally fine. And it was really hard, you know, like how are you going to do 2-minute CBC risk on something that's like this massive, right? You just can't. I'm a little frozen there. Come on. Right, the recording is still going. I just want to make sure recording's working, sound's working. Okay, great. So, anyway, so for me, again, like I said, I'm waiting, typically speaking. I did take a long scalp, and that was here. And the reason I took this long scalp is we had the low of day that was set here. We pull back into the EMAs. That's great. We flipped the 2-minute CBC back short. Yes. We broke the low, but then closed back above where the prior one was. Just a common thing I see with price action. We wicked down a little bit, made this doji, popped up, 2-minute CBC flip. 2-minute CBC flip long tells me that I'm not going to go short, you know, unless I see like a doji here around the 2-minute 20, which probably is very close to 3-minute 20. What time is this? Where's time level here? Yeah, it is actually super close to 3-minute 20, right? So all that being said, I just know it's a sign of weakness. But I took that long. It was just a long scalp. I got my 15 points from it in the same candle. I gave more than that, and then I got out. 2-minute flips back short. This is definitely a tricky one. I can see how this stopped people out, you know, or screwed people up. But I personally just didn't like it the way the wicks overlapped here, and I was just watching this live. This has become one of the big things with having edge, is watching enough candles print live and seeing that this was kind of like just doing this, and just it wasn't showing shoving like you got here. Like you got a big shove down, right? And when this big shove down happens, fantastic place to go short is when we retest the 2-minute 20, and boom, look at that. You actually get a golden zone retracement of a large candle, which that was a 66-point candle. So if you chased it, and that's the big thing too with the volatility being where it's at lately, and volatility rising, being over 17 here and looking strong. Not the place to go short just to slap it short in here. If you waited for a pullback in here, sure, 08 to 28, that's only 20 points, right? And then it does give you a new low of day. So, you can get like, what, 60, 70 here on this flush. But it's really challenging to take that, and you're not going to get that immediate follow through. And why would I be more certain that I'm not going to get immediate follow through is that even though we did have this, we had a very large shove down candle, 2-minute CPC flips back short. Ultimately, we're still not closing below, here. We move, we close down lower. Now I would look at this and say, I'm really extended from my EMAs. I can't take this short here. So a lot of trades that I've seen that people ask me about, and they review, or they ask me to review, or they ask me what my thoughts on there, or say, oh, I took this was a good trade. It's not always the case, especially if you're just chasing down here, and then they end up getting stopped or they're frustrated. I do tend to honor my 15-point stop, and the reason I honor the 15-point stop is because I'm much more patient with my entries and I can wait. I'm comfortable waiting. I like that we were basing underneath this MTF cloud. This is the hourly 3450 EMA cloud. You don't have to use it. I just like it. I also like this here. So when I talk about the 10-minute and the 2-minute, this is an exact. This is one of the exact times where, although I like to trade 10 and 2 when they're in agreement, so both of them being short, you had a huge move down, and the first candle to flip back into the EMAs is likely to be going to be a fake out and get sold, right? This is likely shorts covering, especially after such a massive move. And they push nearly to the mid orb anyway, so you almost get like golden zone retracement. But having this here as well, and my indicators, my automatic indicators here, they chart overnight session low, so I would have had a price level here, which, sorry, this is on the wrong. I want this to be skilled. So I had a price level here, so this would have been like my pre-market or overnight session low. But in regards to that 10 and 2, this is specifically what happens. So we come back through the pre-market low area. Look at this, is the first 2-minute candle of the new 10-minute candle. So you wouldn't have a new 3-minute candle here because this is at 10:10. First thing it does, or one of the things that it does, is it wicks over but it closes back under. So I've seen this enough time, and I have enough confidence in the back testing to know that if we broke over this, right, we broke over the 10-minute candle's high into bearish EMAs, into the MTF cloud, right? And even just like you could say into, like, there was obviously a very key pivot area here. Your overnight close, I'm sorry, not overnight, your 4 p.m. close was also right here. So I would say this is very close to a previous day close breaking base, as I always use the 4 p.m. close. This is enough for me to just say, hey, you know what, I'm going to take this short. I did take this short, right? I was all out on the same candle, as I'm just mostly scalping and not trying to hold runners for these massive moves, especially after understanding context and market structure. We just had an enormous move down, and we have pulled back, and I don't know that we're going to just make another enormous move down lower. And this would have been violent and choppy, as like if we look at, let's say we look at here, if I was trying to hold this, this is a 53-point pullback. If I was again trying to hold this, this is an 82-point pullback, right? And so how do I, if I just use the 2-minute 20, how do I determine when I'm going to actually get out? And if it's a candle closes and breaks over, and then I would get out, this would still be me giving back 67 points. This is after I already held through an 82-point pullback. So I'm just not trying to do all that. I'm just trying to hit my targets, hit my daily objectives on the accounts, or whatever, and just continue to farm through prop. So that being said, great trade to take, in my opinion. I know that the 2-minute CVC is long. I know, but my risk is super, super tight and defined. Even if I waited for it to get underneath this candle's low here at 38, I'd be risking about 20 points to the high, 22 points. So, but again, that wouldn't be something I would do. I feel much more comfortable taking it here and giving it more room to just, if it kind of wants to pop, versus taking it here, having it potentially go back up and just through volatility and then flush back down. There was a trade that Robbie and I discussed that he took, and I want to go to the 1-minute chart for that. And it was this is the wrong day. Sorry. It was right over here. Yeah.
Heyo.
So if you're using the 1-minute chart, and there's nothing wrong with that, if that's the time frame that you like to use,
and it used to be like 1 or 2 things a day. Now this is like
if that's the chart you like to use, here's an important distinction. So you see how this made this move down, right? And then we had a 1-minute candle by candle flip long. So if you're trading on the 1-minute, you are now bullish on the 1-minute, right? You have to watch out for this. You're here, right? Okay, again, this is only the 512 cloud, so this is not a deep pullback by any means. Your 9 EMA is in here. On this candle, when it pushes back down, you get this inside candle that's a hammer. The next candle is important. This candle flips down lower, fails to close and flip the CBC back bearish. That tells me that a bigger pullback, more of a pullback, is likely to follow, right? And I honestly wouldn't be watching the 1-minute. I wouldn't be trading. This is not me personally, but this same thought process and mindset it plays out many times on multiple time frames. So, and I have an example that I'll go back to on the 10-minute from a few days ago. So just needing to understanding, I can't just short this off the 9 EMA. I mean, in this case, you could, and you wouldn't have gotten stopped on the 1-minute 9, but on other time frames, it doesn't always work, right? Because the higher the time frame, the bigger that range is going to be when you look at like the 9 versus the 20, right? Case in point, if you look at like where the 9 would be in here versus the 20, this is 613 versus 682, 680s. That's a 65, 70 point stop, right? You can't do that. Can't do that. I mean, even with micros, if you're doing that, you got to be hitting big targets to balance that out. When you take the L's, you're gonna be in trouble. So that was just a trade I covered with Robbie, because when he showed it to me, I said I said that going short here was something I didn't like, because I saw how this played out. And I think if I remember correctly, mute what? Oh shit, Robbie, you're in here, bro. I can't hear you. I'm sorry.
You can't hear?
Fuck,
That's
dude.
okay.
I don't know how long you've been trying to talk. Hold up. I don't know why I can't hear you.
Am I muted for everybody?
No, I hear you now, bro. You're good.
Oh, okay.
Sorry, dude.
I only just popped in. I was just catching you at the trail end of when you were saying that you were shorting on that MTF, which is pretty awesome. And I don't know if you mentioned it or not, but
Yes.
The entry once he saw it, once there was like those doji looking candles
On the 2-minute, you're talking about right here, the 2-minute at 10:10.
Yes, dude, those are the best kinds of candles to look for on a pullback, especially when it looks like it's away from like an EMA or whatever. Like if you're in a trade that looks like it's a pullback or a deeper pullback than you might have been expecting, those are the best kind of candles to look for.
Yeah, that's exactly what
wrap up that.
that's exactly what I
that pullback.
covered.
Okay,
Yeah.
cool.
Yep, for sure, dude.
Okay, awesome.
Yeah, I was actually just talking about your 1 minute, like the trade that we discussed, your 1 minute candle trade, and how I explained the, when it fails to when it fails to flip, you have an obvious failed flip that it's like, okay, I'm going to stay away because this is going to be a time frame where I don't trust it to continue.
Yeah.
Same.
No, and that was my bad because I took it the first time right where you were showing basically,
Yeah.
and then as it was failing to push down, I had trailed my stop in profit because like I'm thinking to myself, a my entry was a little bit weak, but also we're getting near-ish kind of the CBC flip
Hmm.
territory,
Hmm.
and if it doesn't hold the respect, then it's like then I need to be out of here anyway, right? And then you didn't mention this, and I'm airing my own dirty laundry, but I retook the trade basically. So that was on the next candle.
Hmm.
And by then, I had been stopped out for a reason. I should have been a little bit better. I should have been more patient to consider why it was stopping me out in the first place. And then rather than considering, oh, this is a second opportunity for me to be a little bit more patient to take the trade.
100%. Yeah. Do you mind if I share your chart?
Yeah, go ahead. All good.
Okay.
You can show whatever. Anything that I shared with you this morning is all good.
Okay. Yeah. So this is what we're talking about here. Everybody should be able to see this. It says my stream. Yeah. Okay. So this entry here, what Rob and I talked about just discussing one-on-one is entering in short here on this 1 minute candle. It moves down. He moves the stop protectively down into profit because I think this moved about like 10ish, maybe 11 points in your favor on a target of 15.
Yeah.
Yeah.
Mm-hmm.
So like the big message there, and I do this too, and I had a couple scratch trades today too for the same reason, is if I have a 15-point target and I have an automatic break even like trail built into the bracket. Like I don't have to see it or do it myself. It's just gonna move it. And the reason for that is I believe very strongly the risk reward should evolve when you're in a trade. And Robbie and I have talked about this a little bit on the pod, but if I'm just going off a 1-to-1 bracket, a 15-point stop and a 15-point target, if I am in profit 12 points, I am now looking to make 3 points while risking 27. Like that is so illogical. Like you would never do that. You would never enter a trade like that. Not on a repeated and consistent basis saying, "Oh, I'm going to do this." So that's why I built that in personally to have a break even bracket where it does that for me automatically.
And if I may add, Joe,
Yeah, go ahead.
like what I would add to that is just I never move my stop loss when it's going against me. That's a cardinal sin. But
It
if you're
is.
in profit, and especially if it's near the target like you're talking about, then absolutely that's within my rules to do that.
Yep. Yeah, and cardinal sins, for those of you who are not religious, that means you're going to hell. I'm kidding.
Yeah.
But honestly, you do end up in a mental hell, right? Because when you start moving your stops against you, it's going to burn you eventually, and you're going to really regret it. So, we can often make hell a place on earth, right? And then that's the one thing, like you said, just mistakenly retaking it, seeing how we tried to flip the CBC back bearish, couldn't, bigger pullback probably coming. Okay, great. And then it flips back down. You get a weak low of daybreak. Look, weak low of daybreak, can't close under the low. Can't close under the low, right? It pushes back up. Another low of daybreak, closes back up within the range. At this point, if I'm short and I'm looking at this in the 1 minute, doesn't matter where I got short, I need to get out because this does not look good, right? And sometimes it'll play and it'll just roll over, but most of the time you're going to get what you get here. You get a strong candle, you get a hammer candle. This closes back above the 9 EMA, showing some signs of strength. When you get this dip back down, and then in this candle starts to turn back green, because that's usually the order of the operations here, is it's going to go down, and then it turns back green. Not, on a 1 minute, it doesn't usually go back down and then flip all the way back down, and sometimes you end up with, C- long scalps, but this one plays out and gives you a good 40 points in 2 minutes. because the volatility is high.
Yeah.
And of course, if you had multiple contracts, right, a couple micros or whatever, you for sure want to scale at the 20 EMA tap or the pivot break, whatever comes first. And that's my opinion, right? I'm not. None of this is financial advice. I'm just expressing kind of what I do and what I think about when I'm reading this.
And I think we were bouncing around yesterday's orb at that level too.
I'm gonna go back to the main chart. Yep, that is pretty much yesterday's orb low as well. So back-to-back days there trading the 30-minute orb low is almost the same exact level. Let me just maximize the screen. I want to show. Here's an example. Where is it? Oh, maybe that's not it, because that one did flip lower. Not it. Here's a good example of not to chase, just because like you get a 10-minute candle by candle flips back bearish, and then look, it probably made this move down. I bet you if it went to the 2-minute injected out, it made a move down and then it started to pop back up, and you're like, oh shit, I gotta get out. You can't chase it. Like if you didn't take it short, risking the 20 EMA and the initial bounce low up here, then you just gotta bounce. Here we go. This is an example of what I'm talking about. I want to make sure that we can see this pretty clearly. Then make candle by candle flips back short. It flips short. You get it wicks down under, closes back inside the range here. This is not great. This was a pretty large move. This is 112 points, and this is starting to look good. Looks like you get some indecision down here at the lows and no follow through. You get a quite strong 10-minute candle by candle flip back bullish. Obviously, if you were short, you got to get out. So then, this candle pushes through here. You break the pivot. That's fine. You scale. You get a doji candle. And here's the candle that's the most concerning. You get this doji candle. You get the candle that pushes back down. Right. Again, remember, this is a 512 cloud. I know that most of you are using the 9 EMA. I'll put that on here. I know I have it readily available. Maybe I don't. Here it is. All right. So there's your 9 EMA. All right. The green line. So now at this point, here's the two things with like the 9 EMA is you're now respecting the 9 from the bullish, like from a bullish perspective on the inverse side, like you didn't here, you are now. But the most important thing about understanding the dialogue between buyers and sellers to me is we pushed up, we doji candled, we came back down, we broke the candles low. We were in CBC flip is gonna happen bearish territory, and the buyers stepped back up and held. So that to me is a sign that hey, they just defended. Now that they defended, and this candle closes, when this candle wicks, if I get a wick down, it's a gift. Any wick down into the 9 EMA is a gift, and this here. Let's just say an entry even a little higher. Let's just say call it 30. An entry at 30. Come on. Entry at 30 risking 08 is, it's 22 points. So maybe if you see how much that risk will be, you can size down to like less micros and give yourself a bigger envelope for the same dollar risk. Is one way of handling that. But you would quickly tell, hey, it's not going to work. And if personally, if I waited until this candle flipped back green and I got in here at 33, this is now 21. A 15-point risk gives me a few more points below that current candle's low, which often is respected. And then I have, even less like dollar risk, even if I sized down and said, well, this isn't ideal for me or I don't like it or whatever. But that the failed flip, right, is important to note in terms of the overall structure. Hopefully that makes sense. Here's another failed flip back long. The sellers held it and they pushed back down. This level here is actually your initial balance low. So we try to reclaim the initial balance low. That's essentially your 1 hour orb. Same thing. Try to flip back bullish. Couldn't. Sellers defended. Inside candle. Not looking good. So, and the same thing too here. I'll zoom in really close so you can see it. the bulls had an opportunity to flip this candle, and at one point this was CBC's flipping back bullish on the 10-minute. It's a failed flip, and they closed down lower. So you can take this defining where you want to risk on your own at any point in time. But when I see that the bulls failed to flip back and the bears have stepped in, any ads to go short versus this candle's high are ideal, right? And so this would be, if you entered in right when the candle opened, it would be about 25 points risk, to that candle's high. It's 22 and a quarter, but I don't like having my stop, setting my stop like right at the tip or the crest of another candle, because like, look what happens here. You get like a little wick out. And even then, this candle is pretty damning, right? Just like we looked at on the 2-minute chart here, where look, we wicked over and then closed back under the prior candle. We wicked over, closed back under the prior candle. It's not a good look. And as I'm sure Robbie would be quick to point this out, look at this.
You took the words out of my mouth, brother. I was waiting to see if you'd mention something like that.
That's it. See, I know you, bro. Yep.
Yep. Mm-hmm.
Yeah, and
yeah, that was sweet.
That was definitely very, very sweet. And most traders are probably eyeing VWAP, and I've learned this like many times, I don't like to go long in what I call, I used to kind of call, before I changed my chart to gray, but I used to call it kind of like a black river, where I would have the 9, 12, and like 20. And so this gap between the 20 and the 34, I feel like is no man's land at times, because look at how the price action is just gross, and then we push away from it. So I either want to see like a strong push and then come back, or whatever. And this was not it. And this was on the 6th, right? So it's just a good example of how the price action reads. Later on in the day, things can get wacky, and I typically don't trade that. I want to cover yesterday's reversal as well. So MTF short, I want to hide. No, I don't. This is important to note, because this is your daily 20 EMA, if I'm not mistaken. 1 day. Yes. So you're showing some respect off the daily 20 EMA. How can I do this? I know I got like a lot of EMAs and stuff here. I want to just make this look clearer for a second. I'll just add another chart here. Do it this way. I can take. Okay. Here's what I want to just point out is, if this was like a 2-minute chart or like a 10-minute chart like we just looked at, I'm pretty concerned about like going long. But because this is today, this is the the new candle we have right now. We're inside that one, but we broke the prior candle's high. We couldn't break the low, and then we just dojied out, and we're holding the 2-minute 20. Or this is daily 20. So I would be thinking we're holding 2-minute 20, we're holding the 10-minute 20. Risk is pretty clearly defined here, being that we had such a strong hammer candle here, and then this daily CBC flip candle is pretty strong. And what are we holding? We are holding the golden zone of that. So yeah, we've broken the high, sold back down. Concerning. That's today's pre-market high, which, yeah, barely cracked over this candle's high. So a little bit of a concern, but you would have pretty clearly defined risk. And I think, less risk if you're trying the long versus if you're trying the short from up here. So I just wanted to call that out. 10, yesterday's reversal. I'm sure yesterday's reversal probably caught a lot of people off guard. Now I'm going to hide the MTF cloud to get something off the chart. 10-minute 9. Daily, this year, Jesus Christ, I can't talk. 10-minute 9, 10-minute 20 EMA, orb low here. So you get a little bit of orb low respect. You break down, you get a new low of day. Same thing as concerned, right? About is new low of day break. Look at how they snatched this back up. and then nothing, nothing. You get a you're not getting a candle by candle flip short, right? The bears have failed, the bulls have defended. There's an old saying, right? Is that there's nothing more bullish than a failed breakdown. Something to that extent. Somebody jump in. Is that how does it go? Robbie, is that how it goes?
Sounds about right. I don't know who says that specifically, but that sounds close enough.
Yeah, close enough, guys. As you understand, there's nothing more bullish than a failed breakdown, right? So the bears have failed. They failed here to flip CBC back short. Then they defended it here inside candle. Failed again. They couldn't close. They couldn't push down or even close lower, right? And then you get this big pop. Here, this pop is great because then what happens? You're getting the 10-minute 9 defended on this side, right? So it's like, hey, the bulls have pushed you off sides, and now they're gonna brace and push off of what should have been bearish support. From failed moves come fast moves. Shiny, I should have just called on you. I knew you would know this. And that is exactly what I meant. Yep. So, thank you, Shiny Object Syndrome. You are the man. And then look, it just there is rejection of VWAP. Like, yeah, you get selling over this pivot, yes, but that also fails to break lower. And then you get an inside candle, not showing any bearish strength. It's consolidating a little bit. You know, you have to just think about objectively, what have you done and where, who's where, who is defending what. So, any question? Han Solo, there is nothing more bullish than a fast torta running downhill after an all-you-can-eat Chinese buffet. Yes. But if she's running downhill, that's not bearish?
It's running of the bulls.
That's right, yeah. I'm about to get trampled is what that is. She runs like a bull. Okay. All right, so let's let me just put this on the 3 charts here. And let's just like quickly look at. I have to delete a drawing set because it's fine. All right, study. Again, the MTF cloud is pretty nice. Shiny, I did see your answer, your question, and Robbie's answer to your question is correct. It almost matches up pretty perfectly. The problem is though, is on some charts they don't chart as much as TOS charts all night. And for you TradingView users, you're literally paying for a service that doesn't chart all night. So I want to write into the developers or something like that, write a letter complaint. Really like this move here today. This was pretty telling for me. Here's your daily candle high on VIX. Right there. We'll make this full screen. Right there's your daily candle high, 1801, 1801. 18 is a key level. Whole numbers are key levels, and then I'll also look at the quarters. So 17.75, 17.5, 17 and a quarter, 17. 18 is a big key level. Big level. Right? When you look at previous day high, pushes up the previous day high, pushes over the daily candles high. So here's your intraday, like 9:30 to 4 p.m. high. Breaks over both of them, rejects. Pushes over both of them again. This is a very strong looking candle. Then what happens? Like, you know, what happens? It's just totally weak now. You had this big move, but you couldn't execute and close above. And then you just get like, you know, just crap out right there. So I wouldn't want to be long here anymore. You know, and then I would be expecting for it to sort of trail off. If we look at like when that happens, when does this start to trail off? This is 1150. Here's the same hammer candle here, 1150. And 1150. Okay. So if I take those off so that they're not Should have just done these. That would have been easier. I'll do that next time. All right, so like let's just talk through it real quick. What do we see? Bearish CBC flip. Great. Breaks the low. If you're in, great, you scale. Snatches back up, closes above low of day. Rut row, that's a problem. Okay? Because what happened? Now I'm going to be looking for signs of strength or continuation. I don't get it. You start pulling back further and further, and you're really having like weak basing here off of what is the orb low and the initial balance low. And then just from there, it flips back bullish. And here's a good one. It flips back bullish, right? Your 9 EMA is going to be, sorry, turned it off. Studies. Your 9 EMA is right there. So when we have a failed, the bears have failed to do the flip and it starts to come back up here. If you took this long at 76, you did get about 40 points before, it might have chopped you up or spit you out. This is not the best reversal, and obviously the market was overall pretty weak. It came down here, retested the same thing, and then you finally broke higher into the close of the day. But what I really like about using VIX is understanding where the key levels are. Pre-market high, previous day high breaks, it closes back down. Today's low breaks, closes back above, and the prior day's low was there on NQ. So you're seeing some strength from, Robbie would already have this, buyers in here. And if we look at ES was much stronger. And what is this area on ES? Oops. What is this area on ES? It's orb high. Prior days, orb high. So, very powerful move here. Somebody would probably say this is a demand zone. Somebody else will say it's a breaker block from the turtle soup. I don't friggin' know. It looks strong. It looks concerning to be shorting into obvious support. So just really important to keep the market structure in line. Shiny, what's up?
Midday.
How are you?
I just call good. How are you?
Good.
Glad to see you back here.
Thank you.
I just call it midday support or midday launch of a launch area or something.
Yeah.
I mark it on my charts, the zones. So I had this and it was working very, very well.
Yeah, lunchtime support has been a thing, right? It seems almost like the big guys go to lunch and then something happens. Here's the same thing. The day prior, same thing. We go to lunch, it's about 11:40, we have a reversal. Dang. Yeah, 11:30 right here, we broke the low of day, or we came down to the low of day, snatched it back up, and we made a move. So we really got to watch those. It looks like 3 days in a row.
And if you, on that day, day before yesterday.
Yep.
Yeah, that one. Again, if you go back to your orb high where we have all this wicks
Mm-hmm.
on the top, right? And if you draw a zone around there, no, I'm talking about the orb high.
Oh, here.
Wicks.
Yep.
Yeah, wicks around the orb high.
Yes, I see it.
And once that area was cleared, it launched. So if you mark that zone, then of course that's going to be playing the next day.
Yeah. Easiest way of probably understanding that is that anybody who was a stuck seller who didn't get out here now wants to buy back or break even and get out, right?
Mm-hmm.
And anybody who didn't capture this move, which is if you go from here to the high of day, you're just above the golden zone of that move. Yeah. So yeah, sweet. That kind of sums up everything I wanted to cover, guys. I've already been on for like 45 minutes. Anybody else have anything for me? Sure. I don't want it to come across as me necessarily picking on or demeaning someone's trades. And I plan on sending him this link, so I hope he sees this. Good friend of mine. Sends me his chart, sends me his trades. And a little concern with a couple of them. It doesn't show. I'll make sure. Yeah, it's fine. Ooh. Okay, so really quick. This is 9:15 his time, 10:15 market time, going short at 6:09 on the 2-minute. So let's do this. We don't need VIX. Said I was done, and then I thought of one more thing. Forgive me for that.
Is it like Steve Jobs 1 minute? Or one more thing?
Yes, except I'm not wearing a black turtleneck. Let me see here. Was this a 2-minute? Is this a 3-minute chart? Okay, goodness. That's even more concerning. So, whenever somebody sends me their trade and they're on like a 3-minute chart, I get a little bit more concerned when we're further away from the EMAs, because then it's like, boy, like your true defined risk is pretty high. So, it was in this area here. It's on this second it's this candle literally right here. So a short at 609 covering at 602. So let me just like really zoom in right here. So because the rest of it didn't happen yet, so it's irrelevant. So when this candle is printing, it's really right off. It's just about off the 9 EMA. Short off 609 covers the 602. I'm not really sure why we covered for 7 points. And I don't know if that was just a scaredy cat moving the stop down thing because it went down 17 and so it snapped back up. That could very well have happened in that side of that 3-minute candle. I'd have to replay it. Or look at it like on a 15-second to understand what might have happened. And I think typically if he's running with his usual 10-point stop, he would have gotten stopped here only to watch this like essentially really rage bait you here, because it's like, oh, I just took like a small stop, and then see this sort of move happen. Again, when the volatility is quite high and we're getting the moves that we're getting, trying to thread the needle, like here on the 2-minute, on like the 3-minute 9, knowing that we very well may go back to the 3-minute 20, which would be a sure stop out. Trying to thread this with a super small stop becomes extremely challenging and probably frustrating. So captures 7 points. It pulls back to where they would have been stopped for sure. I didn't see a re-entry on that chart. And then, of course, it gives the move that ultimately we're hoping for. This, I think the best takeaway I would have from this is that the true patience in waiting for the ideal setup, and start zooming in here to see what the candle wicks and closes look like, is that you had this big move, draw the 50 fib or whatever, draw the golden zone off of it and shorten the golden zone if it gives it to you. And of course, shorting the golden zone, what is that? That's right off the 20s level, right? So we've come down here, we break through the 80s, we come back through the 20s, 20s rejects, and what's going to happen? We just flush, right? 70s to 80s fails, we go to the 20s to the 30s. Oh, look at that, we hit 29. So waiting 6 more minutes, 3 minutes, 6 minutes ish, gave a much better trade. Much better trade. And like much better in the sense of, hey, and I'm going to just get rid of the fib. Hey, I can repeat this. Hey, I know really where I'm closer to where I would be, quote unquote, wrong. And if you're sized down enough, you could wait and see if this is going to really close above the EMA or not. Also, too, I do kind of like this, where this is like failed sellers and allow like re-engaging. Robbie would I don't know if Robbie would draw that one, but Robbie's a zone master. So that's the first one that I didn't particularly like. The second one, again, and I'm glad these trades worked out for him. The second one, and these are both combine trades, right? So the second one, he is here. Again, we're on the 3-minute chart at 11:33 his time, so it's 12:33 market time. Give me. All right.
And they sized up too.
Yeah, they didn't. That was hold on. No, it was 2 again, 2 NQs.
Oh, I didn't realize the first trade was 2.
Yeah, I think, let me see. Yeah, the first one was also 2 NQs.
Oh, okay.
Yep, so it's the same. Okay.
Okay.
Yeah, good thing. Good thing there wasn't a size up there. So it's right here. So again, I like the market. I like the way this looks. I like the idea of, hey, this is going to push up potentially, right? Because you had, but I don't know that that's really guaranteed, and this doesn't exactly exude a lot of confidence. But the thing is that when we reclaim the 3-minute EMAs with 3-minute CBC flips back long, they can't flip it. They can't flip it. It's just consolidating, going sideways, and the EMAs are getting ready to cross and start to curl up. I like entering in down here, understanding that if I'm going to take this trade long, saying, okay, I want to go long, I see the market structure, I see we kind of have an inverse head and shoulder potential look to it. Like if you looked at like maybe left shoulder, head, right shoulder, just looking at like these wicks. I mean, it's crude, but you get what I'm saying. Let me go to, why is it not popping up? Yeah, you see kind of like this looks good, very, very long wick here, and I want to take these off now. You see too, where they really fail to bring it back down, and they fail to flip the CBC back long. They bring it back down, fail to have continuation, snap it back up. I like the long thesis in here, much better than note the entry on that trade at 576. So at 576, you're entering in essentially here. 576 and a quarter. That's the exact entry. So entered right at the pivot break. And that's the place to scale. Now, I would personally be thinking, hey, we're probably going to go at least to here, and we do. And then, we're that close, we get kind of sucked into VWAP. And I'm really glad it worked. I just, from a repeatability, risk reward, like scale up ability type trade, from here, like where would you truly be wrong? You're going to be wrong like when the candle's closing down here. That's 25 points away. So if you're using a 10-point stop, which again he normally is, I've tried. I have repeatedly offered that it might be a good idea to size down and increase that stop distance. But that's here. So it's not uncommon for this candle to push up. You get some sort of push down, it closes in this area. You get a long wick down here. Why would you think you're going to get a long wick? Or why would you say, Joe, how would you know? Or why would we get a long wick down into there? Well, because look who is most recently stuck. So if there's nobody in here ordering or willing to buy in here, the market is an auction, nobody wants to buy in here. These folks want to buy right here. Why do they want to buy there? Because they're stuck. So if their buyback order is just sitting there on the market and there's nobody on the auction who wants to bid in here, it sucks back down to them and then it pops. You can watch it happen time and time and time again. So, all that being said, I think that buying the exact pivot break is basically breakout trading and not as reliable. And not what Maple teaches at all, right? So that's it. That's all I got. Oh, Professor Finesser, when PA slows down, what do you usually wait and look for? Like ES from 1 p.m. to 2 p.m. Eastern. Yes, from okay. What's 1 p.m. to 2? Like here. Honestly, dude, I try not to. I would most definitely attribute a lot of the recent success from it's not over trading. It's trading when the market conditions are not optimal for my trading style. You might just say, "Well, it's over trading." Whatever you want to call it. I don't care. You can call it whatever you want to call it. This is not an optimal area for me. And I've also completely removed from my trading this window of time. Like most of the time I'm waiting until 10:10 to trade. I can't tell you the last time I took a trade inside of this window. So even though it does offer great opportunities. So anyways, thank you. Thank you, Robbie. Thank you, Shiny, for chiming in. And I'll upload this video now.
Bro.
Yeah, I hope you guys enjoyed it. See ya.
Thank you. Bye.